Hello, welcome to another edition of Arrow Insights. My name's Ryan Synnot, and I'm with Peter Leggett today to discuss the world of emerging markets. Peter, what are your thoughts on this topic today?
I'm ready to talk about emerging markets because it's an exciting opportunity. It's been a buzzword for probably 15 or 20 years here in Australia, and there's opportunities everywhere. But as you well know, as our investment and research area, there's risks involved in this as well. So, Ryan, from your point of view, when you're looking at EMs, emerging markets, what are some of the areas or considerations that you're looking for in building better portfolios?
Yeah, so typically with emerging markets, we're looking to invest in economies that have higher growth rates than domestic or developed world economies. And as a result of that, you'll often find that the demographics, the geopolitical environments, as well as the socio-economic conditions often differ quite substantially to what you would see in the developed world. And this offers a great opportunity set to the everyday investor.
People who would think about emerging markets would say, well, yes, the last 25 years have all been about China. And that, not all about China, but China's been a very important part for not only its own developing economy, but also impact around the world. Let's leave China aside for the moment. What are some of the other areas, countries and opportunities that we're looking at, that you're looking at, but equally, what are some of the risks you're seeing in that as well?
Sure, Peter. One area of note for us at the moment is India. India are emerging at quite a rapid pace and have very attractive social demographics. Some of the key risks within investing in emerging market equities is the geopolitical tensions, but also the instability of their governments and their systems.
It's interesting when we look at India. We've been keeping our eye on India for probably 11 or 12 years now, post-GFC, and yet we weren't ready to invest our own money, and let alone our own clients, or put it into portfolios because of just unsure about where the economy is going, and in particular around political leadership. Now, we've seen some stability in their economy and in their leadership. What are you seeing also in other parts of South Asia and Southeast Asia, where there has been, over the last decade, some political and population unrest? Equally at the same time, there's some outstanding companies in these regions.
That's correct. So across economies such as Thailand, the Philippines, Indonesia, many good companies coming out of those that are finding their way into both emerging market portfolios, but as well as broader global equity portfolios. Peter, if I could throw it back to you, if we explore the benefits of incorporating an emerging market allocation into a portfolio, what do you see the main benefits are for investors?
Ron, the typical answer that most people would give, and I'll add to that as well, is diversification. So you're not putting all your eggs, so to speak, in the Australian economy, in the Australian listed share market. You're not putting all your eggs in, say, America now, which has opened up many opportunities over the last 20 odd years for Australian investors to be directly and indirectly investing in the American stock market and the American economy. So diversification is a critical part of that. But equally, some of the best companies in the world, both listed and unlisted, so let's be clear here, emerging markets is not all, as you well know, just about businesses on the listed stock exchange. Many of them are unlisted, and equally in the issue for us around, or the opportunity around lending, debt and credit. So businesses grow not only by raising capital on that side, but also borrowing money to build and grow. Some of the best companies in the world are found in this region. And without giving advice, but one of my favourites, as you well know, is a Taiwanese company, TSM, that makes a substantial proportion of the world chip and semiconductors. They're based in Taiwan, and they have been building in a wide range of areas as well. So diversification is critical. The second part of that is, and you alluded to it before, Ryan, is around changing demographics. And you look at a country like Indonesia. Many Australians struggle with the concept of Indonesia, particularly if we go back to 2002. But Indonesia is an extraordinary emerging nation, and the same with Vietnam. Young population, demographics, local economies, those sorts of areas. From your point of view, so if we're using diversification in these areas, The themes and trends that you're paying attention to now in these emerging markets, what in particular is capturing your attention?
Sure, Peter. AI has definitely been a big buzzword of the past 12 months, and there are many companies across the emerging market space that play into that thematic. When you're accessing emerging market equities, what are the common ways that you can find everyday investors can tap into that market?
20 years ago, it was really difficult. There were one or two global asset managers that specialised in that area. They had people on the ground, and particularly in Asia, parts of South America, agricultural type area as well, lesser extent in Eastern Europe. But today there's been an explosion, if I can use that word, of specialist asset managers who their focus has been on emerging markets. So they're putting a team of researchers and analysts, they're travelling to visit countries and understanding firsthand, sitting in front of CEOs and CFOs and boards around what's going on in companies and in their local economies. But equally, what has also opened up is this explosion of superannuation money here in Australia. The wealth of Australia has exploded. Money in transition, inheritances, retirement. And so the financial service or the financial marketplace has needed to open up different ways for people to access that. And we've now seen, look, Brian, I think over the last 10 years, and I used the word explosion before, but there's been a massive increase in solutions or ability to access these emerging markets by things called exchange-traded funds. Both listed on the Australian Stock Exchange and also through different asset managers as well. It's been a low-cost solution, easy with liquidity, be able to buy and trade if necessary, and some of these themes and trends or the emerging market. I think that's been a massive benefit as well. So if I flip back to you, part of your role is building better portfolios for the future. How are you seeing EMs playing an important part of that, and how are you accessing that in those portfolios?
Sure, Peter. Within portfolios, we access emerging market equities both through managers as well as ETFs. I think from a portfolio perspective, it's important to acknowledge that emerging market equities don't necessarily perform at the same time as developed world equities. And in turn, that can produce a smoother return profile and lower volatility throughout a longer term investment horizon.
Can I just jump in there? The expectation of putting something in a portfolio is, yes, diversifying. Yeah, we understand that, lower volatility. But you're also expecting it to return good returns over an intermediate, longer term period of time. Is that part of the reason for that as well?
Yeah, that's correct. We would expect over a longer term horizon, given you're investing into countries generating faster and higher rates of GDP growth, you would expect companies associated with those economies to outperform. Peter, thanks for your time today. I think you've done a really great job of summarising the world of emerging market equities, and we thank you for tuning in.